Welcome back. Well, we have the Nifty, which is holding steady, so up around 19,245. We have the mid-cap index, which is up around 0.7%. So steady state for the markets, no real complaints which are coming in at this point in time. Let's get to another company now. Netweb Technologies is on our radar. The company has witnessed a recovery in Q2 as the revenue has recovered over 140% sequentially, and the profit has also surged, although their gross margins have contracted. We have with us Sanjay Lodha, who's the chairman and the managing director of Netweb Technologies, joining in to discuss this. Hi, sir. Thanks very much for joining in. This 142% Q-on-Q growth that you've seen and 96% year-on-year growth that you've seen, what is it attributed to?
Yeah, actually, basically, this is as per as we had committed and we has indicated that basically we had indicated very clearly at the time of going at the IPO also that the growth rate for our company is somewhere around 40%. We grow at the rate of around 40% CAGR, and around basically 1/3 of our business comes in H1, and basically the 2/3 of the business comes in H2. So basically that has been in the line. If you see our record for previous few years also, and so it was very well anticipated that basically we will be achieving this kind of growth, and basically we have really grown very well there. And plus, basically, if you really see, because our kind of business, as I mentioned last time, we deal with large government and basically large enterprises, can be only judged on a year-on-year basis. And basically, you can get some fairer picture basically on H1 and H2 basis rather than a quarterly basis. So I was very confident that we will be achieving this kind of basically performance, and we have achieved it. And plus, basically, we are primarily, the business can be judged in the terms of the kind of pipeline you have. If you see our pipeline is more than 3,000 crores actually. Out of that, more than 150 crores.
Mr. Lodha?
Okay.
Yeah, Mr. Lodha, sorry to interrupt you, but even on a year-on-year basis, if you look at it, you said even if you compare it year-on-year, the revenues are down almost 18%, and even the margins, right? There's been a significant decline in your gross margins this time, both quarter-on-quarter and year-on-year. So just trying to understand from you, is there any major pressure that you're facing in the business, and do you think that can extend into second half also?
No, basically the revenue has not declined year-on-year or basically quarter-on-quarter. If you see, basically the revenue has really gone up from basically year-on-year and basically quarter-on-quarter also. As regards the gross margins are concerned, very clearly, as I have indicated very clearly, last time also I told you the gross margins were higher, but we told you this is not practical, because what happens is that we may have one or two orders which may get us some good margins. So that's the reason the gross margin can be up. But basically we have always indicated our gross margins will be in the range of 27 to 28%, and we have been maintaining that very, very clearly. Even basically, if you see financial 23, it was around somewhere around 27% actually. So basically, we are completely in line with the kind of margins which we have projected, and we are very, very definite to hold on, and we have indicated that very clearly.
All right, we understand that, and we remember you saying that at the end of the first quarter as well, Mr. Lodha. I just wanted to understand, your order inflow guidance for the year, because your order book right now is close to around 217 odd crores. You are L1 in close to 350 crore worth orders. And what is the revenue potential from servers? Because I remember you saying that this could be a potential business opportunity for you going forward. So on both these fronts, if you could give us some sense, the order inflow for the remainder of this year and business potential from servers?
Yeah, so basically what happens is that, as I have been very clearly mentioned, we are not primarily box pushers. We have been primarily our product lines are defined into the major segment is one is the HPC, that is the supercomputing segment. That is one of the major areas that contributes around 40% of 35 to 40% of our business. The balance 35 to 40% come from private cloud and HCI. So that is another major area for us. These two areas have been growth areas for us and been constantly growing, and basically these will remain be a growing area. The third area for us is AI systems and workstations, and definitely we are seeing a lot of traction around it. Definitely that area we feel will be growing. But definitely, since we are seeing a lot of growth in the HPC as well as in the private cloud and HCI, so we feel slowly you will see a percentage change into the AI vertical as well. So these are the areas we are there.
Okay, just quickly then, you've seen a 42% CAGR in the last 3 years. Now, based on this quarterly fluctuation that you've seen in terms of revenue, because Q1 was lower, Q2 was higher, what are you probably exiting FY24 with? And what might we expect on a compounded annual growth rate, say for 3 years?
Yeah, basically the thing is that what, as I had indicated on your, I think I remember on your call only, that we are targeting a 600 around, if we grow by around 40% CAGR, we are targeting a growth rate of around 600 crore. Yeah, total year we want to close the year around 600 crores. You already see that we are already 204 crores, 217 crore is our order book. We are already L1 in 350 crore. Plus, basically, we have a huge funnel. So we are very confident of achieving the numbers which I have projected, because this is basically very, very enterprise business and basically very, very focused. So we are very well able to clearly project our numbers. So it is around 600 crores which we are seeing. In future years also, we are seeing similar kind of growth, around 35 to 40% of CAGR. We are clearly very confident of achieving it year on year.
Okay. Actually, it was my mistake. I was going through your Q1 numbers. In Q2, yes, you were right. Your revenues on a quarter-on-quarter and year-on-year basis have gone up. But I think the concern remains about the gross margin decline, which you addressed at the moment. So just to get a number from you, the gross margins are at 27% right now. By the end of the year, where do you think you can end, what would be the exit margin rate?
Yeah, so basically, as I have been indicating very clearly, and if you see over a period of years, we have very clearly, we maintain overall year on year, you will find a margin between 27 to 28% as regards the gross margin is concerned. And PAT will be between 10 to 11%. That is exactly which we have been providing guidance also. And that has our track record also proves the same.
All right, Mr. Lodha, finally, before we let you go, just a one-word answer on what currently is your capacity utilization and where do you end this year with?
Yeah, so basically since basically we are getting into we are getting a lot of traction on the new technologies as well. So we are basically we are designing everything in India. We are manufacturing everything in India. The software stack is completely built in India. So currently we are expanding because basically we had said that we will expand our manufacturing facility and that will get ready by 25. Okay, but since we are seeing a lot of traction and basically primarily on the ARM side of development, even on the Intel and AMD side also on the new models which we are trying to introduce, the networking switches and 5G as well, products as well. So basically that is putting, we feel that we should start a manufacturing. So that's our new plant is getting ready, and we are very sure the new production line will be ready for production by end of Q4 this year. So we will be getting 1 year ahead on the production schedule actually.
Okay, all right. So we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Netweb. We do have the numbers coming in from Prism Johnson. That stock is up around 2% post numbers. Revenue is up 6%, but there's been an EBITDA loss. Maybe there's an exceptional which has resulted in a bottom line profit for the company this time. We'll take a short break, but up next we have a special segment, Inside Edge. We will be focusing on the diagnostic company Dr. Lal PathLabs on the other side. Stay tuned.